Hi, I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network. In today's Econ show, we have a lot to cover. I shouldn't say that. We have a lot of geopolitical updates to cover, not as much in terms of economic data sets, just because things were a bit slow into year end and then to kick off the year. So the show in total will be a little bit shorter. And one of the things that we wanted to revisit in segment one is an article that I had written back in March of 2021 of what happens post-COVID. And one of the things that I had been saying was that you were going to get a lot of global unrest, you were going to get a lot of protests, a lot of political pressure, especially as inflation took off and you had pressure on the food, as well as living wages and just living expenses going crazy. So what we're going to do is we're going to look at global unrest, looking at what happens post-COVID. Then we're going to look at U.S. leading indicators in terms of some of the different shifts that we've seen on just what is happening in the U.S., what is happening in terms of PMI, what do we see kind of forming for Q1. Then we're going to look at Europe and look at the German economy slowed further, and it actually went into contraction according to PMI. So we want to look and talk a bit more about where does Europe sit over the next quarter. And then we're going to shift to Asia, and we want to talk about some of the ASEAN nations because their economies did improve over the last quarter while China continues to struggle. And we want to look at, what are some of the things that the ASEAN nations can accomplish and can do, and then what are some of the problems that China is going to face, as even though we should see some sort of stimulus going into the expectations are to see some sort of stimulus into President Xi being named president forever and the Winter Olympics. But I think that instead of seeing stimulus, you're just not going to see additional tightening. And I think that is going to be a bit of a shock to the market, if you will, for where the expectations are in terms of where things go next for the PBOC and the CCP. So now we're going to pause and we're going to talk about Kazakhstan and how it relates to what's happening with Russia, the Ukraine, and what does it mean for Kazakhstan in general. So this is showing the old palace, Akimat of Almaty, and you can see that they've set the building on fire. They have set multiple public service buildings on fire in multiple cities. This is not just one area that is seeing some issues. So Tokayev, he is the current Kazakhstan president. There was rumors that he had resigned, but then that was a misprint. It was actually he accepted the resignation of the government, which is really his advisors, his board, and then he removed, or I should say, stripped the power from his predecessor, who essentially was his mentor and who really is viewed as handpicking Tokayev, the Nazarbayev, and he had a role as head of the country's Security Council, and he took that away and essentially moved that. So part of the demands of the protesters is to have a new election, reinstitute the Constitution from 1993, and really get rid of Nazarbayev, because one of the chances get rid of the old man, and that's who they're referring to in terms of trying to get this to change. What really broke the camel's back, to use Anas's term, I think is really the LPG pricing. So LPG prices exploded, and when you look at why did they go up? Well, they were transferring from a fixed price to a floating price that was going to be electronic. And that created a big disruption because actually a lot of their cars and trucks run on propane, because propane is cheaper than diesel and gasoline because it's subsidized. So as that went away, that was what kind of snapped everything. But they've been facing inflation. They've been facing, economic slowdown. They've been facing everything that everyone else has. It's just this was the rallying cry. But they've been there were issues when Tokayev took office. Like, there were issues then. There was issues that his predecessor was staying in power. So there was always this political underpinning that was just sitting there, but they did achieve some sort of stability. There's been a lot of outside investment into Kazakhstan, especially from China and the U.S., which we'll talk about in a minute. And there's some fear that this will start to unhinge that, especially because a lot of crude, or I should say about 1.8 million barrels a day, comes from Kazakhstan. And we have seen strikes at these locations. So far, again, this is so far, there is now a internet outage, or I should say blackout, due to this. So we really don't know if there has been a decline in production. So far, there hasn't been. But that's something to be watched. So Kazakhstan's president stripped his powerful predecessor of a role of head of country's Security Council. The cabinet resigned, but that failed to quell the protesters' anger after days of unrest triggered by a fuel price rise in the oil-producing nation. Now, again, that was what set it off, but it wasn't. It's been seething beneath the surface for some time. Though the unrest was triggered by a fuel price rise, there were signs of broader political demands. After accepting the cabinet's resignation, Tokov ordered acting ministers to reverse the fuel price rise, which doubled the cost of LPG from the start of the year. And again, if that was your issue, you could go back and you're like, hey guys, we won, we did it, we can go home. It's still going. And the reason why is because that was what triggered it, but it's not really what the anger is based off of. It's political, and they want more of a democratic backdrop, which again is going to create additional issues. It's all, and so how did it start? So it began with the phased transition of trading that began January 2019 and concluded on the first day of this year. The idea was to gradually end the subsidizing of prices for domestic fuel consumers and to allow the market to dictate prices instead. So this is what does this mean, and how does Russia kind of fit into this versus what's happening in the Ukraine? So the Kazakhstan president has asked the CSTO, which is the Collective Security Treaty Organization, for help amid violent unrest gripping the nation, claiming that terrorists were overrunning strategic facilities across the country. So they have said that they are currently fighting bands of terrorists in different areas, and that the military is currently engaged. So he is asking, and the CSTO partners, which are Armenia, Belarus, Kazakhstan, Kyrgyzstan, Russia, and Turkmenistan, but really Russia is the leader of it. Russia is the guy that is going to be the big person that's going to take it, that's really going to be the driver behind settling this and bringing troops in. And this is where, and if you go back to when we did that deep dive on Afghanistan, we were saying that there was fear that Afghanistan was going to become a much broader issue. And we were saying that that was possible, but there were already things beneath the surface in other Central Asian nations that you didn't need Afghanistan as the flashpoint. It could have been the flashpoint, but it's really going to come down to living costs, wages, inflation. And I think that's going to create, we're seeing something similar in Pakistan and other areas in the region. And now, while Afghanistan had the chance, Kazakhstan really has the chance of bringing this to a new level. And the reason why this is so important is because, well, Russia has moved the assets, the military equipment, the personnel that's typically on the border with Kazakhstan to Ukraine. So now they would have to take those individuals away from where they are next to Ukraine and move them back to their position and into Kazakhstan to support what is happening there and the request of the CSTO. So when we look at where things are going at this period of time, the Chinese investment in Kazakhstan, is there a point where China looks to get involved because they've been trying to increase their influence in the Central Asian nations? Here you can see the investment in 2019 of $27.6 billion US dollars. A lot of that in that petrochemical side, oil and gas, mining and metallurgy. There is a lot of uranium coming out of Kazakhstan, which is obviously a very important piece of it. So when you look at it really comes down to that democracy side. So young internet savvy Kazakhstanians, especially in Almaty, likely want similar freedoms as Ukrainians, Georgians, Moldavians, Armenians, and we're starting to see that come over. But the Kremlin has said it expected the country to quickly resolve its internal problems, warning other countries against interfering. So the question is, will they instead try to interfere and not allow other countries, and this is kind of a backhanded comment to China, to stay away and let them deal with it? Kazakhstan has been grappling with rising price pressures. Inflation was closing in at 9% year on year late last year, its highest level in more than 5 years, forcing the central bank to raise interest rates to 9.75%. Again, inflation, emerging markets, this is everything that we've been talking about. So the next question will then be, how do things shift in general? Clashes between protesters and security forces continue, and why is this an issue, and how is Russia trying to kind of mitigate some of these issues going over? Well, let's look at Russian gold and Forex reserves. You can see that they've been increasing gold reserves, foreign reserves, because they're trying to protect the ruble. They want to protect some of their assets because they're seeing, Putin is seeing what is happening. There's political unrest, concerns about if he does move into Ukraine. What does that mean if the U.S. puts sanctions, denies them access to SWIFT and U.S. banks? How much foreign reserves do they have on hand? How much gold do they have on hand? And that's why there's concern that maybe Russia did this in Kazakhstan. Maybe the U.S. did it. This is something that has been bubbling there for years, and it just came out when LPG prices surged. The other issue is the Russian economy is not all that strong. So you look at PMI manufacturing coming in fairly in line, GDP fairly in line, but real wages were expected at 1.4% in October, came in at 0.6. Retail sales were expected at 4.3, came in at 3.1%. Then you look at CPI, well above expectations. You're seeing some of these pressure points. PMI services came in above expectations, but still in a contractionary standpoint. Russia PMI composite just barely in the growth phase. So you can see that there's this stagnating, slightly declining Russian economy, which makes it very difficult to expand yourself to two fronts. The Ukraine would be obviously one. And then you look into the Central Asia would be another, and that would start to stress a already stressful situation for Russia in general, while they also continue to play the game of how much natural gas is in European storage. And here you can see just where it is versus 2020 versus the 5-year range, and where it is in 2021 heading into January. Again, kind of keeping some of these things intact on what happens next. I do think Russia will try to show support because they can't lose the support of the stands, if you will, in general, and Central Asia. And this is going to be a very important kind of point when you look at how does China react and how does Russia react, because even though there's views that they're friends and they do things together, and now Russia and China are allies, this is going to be a big test on just how close are they, and the answer is not that close, and they will not be moving. They'll make sure that they don't move in. Now, when you look at India versus China in these ASEAN market, and you look at India, Myanmar, Thailand highway, this is another big important piece of why Myanmar issues and how that goes through becomes a big problem. Because remember, when we look at this where Bhutan is and the Doklam Plateau, the IMT highway cuts right through there, which is a very big soft spot of where China and India have had conflict on the Doklam Plateau, in Sikkim. And this is some of those fears and issues that are continue to arise. But it's important because India really needs this to help expand, get to the other side of the Strait of Malacca, but by doing it by land and getting access to Thailand and other areas. But obviously what's happening in Myanmar is a huge problem. because it's important for India and ASEAN connectivity projects, which could be disrupted by insurgent groups in India, but also in other areas. So the one thing to watch is the People's Liberation Army, Manipur Naga People's Front, and others have been attacking some of this, which again is which is creating some additional strife, especially in some of those areas. So then when we start looking at, and honing in on what is happening, not only just in the Doklam Plateau, also in Ladakh and the other areas that we have to look at in terms of the build out of China versus India. So Chinese road construction improvement activity has rapidly risen across the Aksai Chin through 2020-21. In multiple sectors, we have new bridges, wider roads, repavement of routes, and then fresh construction on alternate roads. And this is just ways to strengthen the logistics of getting heavy machinery, personnel, equipment to the front lines if there is some sort of issue. And typically a lot of this happens during the winter months when not much can happen just given how cold it is. So then when you start looking at other media reports, when you look at the Pangos Chinese bridge infrastructure, this is taking the previous chart and zooming in now to look at that pinch point of the bridge. So there are reports that there alleged new bridges under construction connecting the north and south bank of the lake, which would in turn enhance the road connectivity for China's troops in the area. And if you look at the fact that they're building roads, they're expanding roads, they're building additional roads, they still need to get over this instead of going around it. And this is going to be an interesting thing to watch on a connectivity, and again moving things into that PLA position when you look at connecting one side of the lake with the other and being able to do it quickly. Now shifting gears a touch and looking at Sikkim. So China's military developments opposite Sikkim, India have continued steadily through 2021, enhancing PLA positions with new posts closer to the border, supported by freshly constructed improved roads, exercises, drills. And this is just looking at what has been done in that area. And there's some of the things are a little bit further off the border, but they're supporting areas. They're staging areas, or things that would be very important for this push through Sikkim, the Doklam Plateau, which again relates back to the IMT. So then when we take this to the next level, well, it's not just China doing it. The upgrades ongoing at the Bagdori Air Base indicate significant capability improvements for the Indian Air Force strategic site located just south of the Doklam Plateau, boosting air power in the region, which is very important when you think about the IMT coming right through there. What China's been doing on the other side, they want to be able to respond by having that air force available. So then when we look at some of the things that are happening in Tigray and why is this happening in Sudan, Egypt? And it's interesting when you look at the Arabian-Nubian Shield, and this is just an area that is rich in gold, copper, zinc, and other types of metals, and semi-precious as well as metals for when you think about the growth of EVs and how we're seeing some of these shortfalls. So when you think about the civil war that is happening, these uprisings, you always have to put it into what is driving, what money is driving, what assets. And I think this is an important one to look at and understand where some of these pressure points remain. And again, these flashpoints are not going away. They're not going to disappear because we want them to. There are a lot of pressure points all over the place that are going to flare up. This is just another one of those examples. All the while, when we look at global manufacturing PMI, things flatlined a bit. We do expect this to come under additional pressure, still remain in growth, don't get me wrong, but it's just you're going to see some of this drift lower as these pressure points continue to arise and get worse. All the while, when you look at United Nations CPI indices, this is what's going to drive it. You have meat, dairy, cereal, oils, sugar, and these are food oils, not just crude oils. So when you look at the pressure, it's across the board, and this hits people on how they put food on their table, how they feed their families, because again, if you can't feed your family, you will be more willing to go to war and fight than if you are angry about something and you can feed your family. Again, things happen, uprisings occur when the economy is weak, not strong. And this is where, everyone can point to the stock market and, the stock market is up. But the stock market is not the economy, and the economy continues to be under pressure. And price controls can only do so much, and it costs the government money to do price controls. Price controls are not something where you put that price there and you think, oh, don't worry, it's fine. But, it's someone else's problem. Well, all of these countries have issued debt. So they issued debt through 2020 and 2021. Well, you have to pay back that debt. You look at Pakistan that is talking about buying new new aircraft and military aircraft with what money? If there's going to be something that's going to set people off, it's going to be, well, how about you protect prices right now and help in inflation and not worry about buying 18 new military aircraft? These are some of these pressure points and price controls, as we've seen. Once people get used to them, it's very hard to take them away. And once you take them away, there's always a price spike because you're just bringing it mark to market. People aren't going to game the system. They were trying to game it because you had the government that was eating a lot of that cost. But now governments are experiencing that, as we've been talking about, the monetary and fiscal drag is going to be big and real. So then when we look at what has happened on the average, talking about the U.S. now, here you can see the average forward-looking indicators from Philly Fed survey, led by 3 months, coming down, again, pulling that manufacturing side lower, and it's happening in multiple areas. And that's when you start looking at the inflation surprise. Now, we do believe that inflation kind of slows a bit, and it's really not that it reverses and we see deflation, but you just get essentially this flatlining, and stagflation really picks back up because you're just looking at those surprises across the G10, which again is going to draw things down as it's leading into the global monetary policy map of tightening. Everyone continues to tighten. As we talked about Kazakhstan, they raised rates. That increases the price of borrowing for companies, for individuals, which is also going to lead to people getting very angry. So global monetary policy map, the rush to rate hikes. And then we have the Fed minutes coming out saying that there's a good chance now that they're going to raise rates at the first meeting, which has sent the market lower, even though this is a base case for us. So again, not all that surprising. So when we start looking at other pressure points, the dryness in Argentina is of top concern for the market as the forecast looks dry through mid-month amid La Nina. Most critical time for soybeans to get rain is February and March, and you can look at the deficit and see the problems that are arising as we talk about food, as we talk about price, and these underpinnings of where these pressure points remain. And then, we have China looking to increase soybean production. Now, they say it, but how are you going to increase it from where it was in 2018, 2019, 2020, 1920 to here? This is a huge jump. And it's nice to say, but I don't think they're going to have the capacity to do so. And it's going to become an underlying problem as we're unwinding globalization. So the value of foreign content in manufacturing production, the reorganization and shortening of supply chains will have a cost that will be passed down to the vendors and ultimately the consumer. U.S. consumer prices benefited by an annual 0.1 to 0.4 percentage points between 97 and 2018 when you look at deflation that is now going to be imported and create some of this pressure. Now, when you start looking at the pressure and where we talk about, so Turkey's foreign currency war chest is now negative. They have spent a significant amount of capital trying to protect the lira, which is why you've had this big reversal of this steady fast move, because they're running out of the physical capacity to do it. All the while you have PPI, producer price index, exploding higher, well above expectations, with CPI, shocking, I know, low rates, high inflation, going through the moon, keeping that pressure. And this is all what we've talked about, looking at emerging markets, looking at pressure. And this feeds into where we see demand and the pressure we see happening in the demand backdrop as we go through really all of 2022. This isn't just a Q1 issue, but how things are going to continue to kind of play out as we come into the post-COVID world of uprisings and the issue of living wages and costs.